Supply and demand controls the market. Let me explain why. Hey guys, welcome back to the channel. Today we are talking about one of the most important concepts in trading, supply and demand. In this video, I will focus mainly on the theory so you understand the core idea behind it. And in the next videos, we will move step by step into the practical side where I will break down real charts, zones, entries, confirmations, and full trade examples. Understanding the foundation first will make the practical lessons much easier. So let's jump in. Let's start with a quick real life example. Imagine Apple release a new iPhone. If that iPhone costs only $200, demand would explode. Everyone wants one. But if the same phone costs $20,000, demand drops instantly. This is supply and demand in its simplest form. Low price equals high demand, high price equals low demand. Markets work exactly the same way. In trading, price moves because buyers and sellers create imbalances. When demand is higher than supply, price goes up. When supply is higher than demand, price goes down. So, our job as a trader is to find the areas where these imbalances happen. A demand zone is an area where buyers strongly push price up from a clear base. This is where buyers observed all the selling and create an imbalance. Price loves to return to these zones, and that gives us great entry opportunities. A supply zone works the same way, but in the opposite direction. Sellers took control, pushed price down aggressively, and left an imbalance. Price often comes back to these levels before continuing lower. When drawing supply or demand zones, keep it simple. Mark the entire base, include the last opposite candle, and avoid messy structures. The best setups come from clean, impulsive moves away from the base. Not every zone is equal. Strong zones reject price quickly with a clear imbalance. Weak zones grind slowly and usually fail. Remember, quality over quantity. Supply and demand becomes even more powerful when you combine it with market structure. Trading with the trend and waiting for a structure break gives you much higher accuracy. Don't just mark every zone, focus on the ones that align with the overall trend. To enter a trade, wait for price to return to the zones and show a rejection or structure shift. Don't guess, let the market confirm. Place your stop above the zone for safety. Many traders fail because they mark every little consolidation as a zone, or they trade without confirmation, or they ignore the higher time frame. Avoid these mistakes and you will see a huge difference. In my course, I go deeper into everything: how to identify strong zones, advanced staking methods, confirmation techniques, and real chart examples. If you want to master these concepts, the link is below. Thanks for watching, guys. If you want more examples or live breakdowns, drop a comment below. Don't forget to subscribe, and I will see you in the next video.